Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Unless the global situation turns murky. You know, you have just entered a situation where the global market is more important now.
Yes, and we have also entered the trading zone. The bell has gone. Udayan, Bank Nifty didn't open at 1.3. It's opened more minus 1%, 1.07. So 300 points down. Now 296. So the first dip has gotten bought. First was the dip, of course. 79 down only on the Nifty. So, you know, it's a 2/3 of a percentage point fall or a 0.7 fall. Rest of Asia is, you know, the least that any market has fallen is 1%. Almost all markets are between 1.5% and 2.5% down. So that way we look like relative outperformers. But again, as Anuj has been reminding us, there was a goodish bit of fall that we experienced in the latter half or in the last hour on Friday itself. So we were alive to the Turkish lira problem from 2 o'clock on Friday, and some of it was absorbed. But all the global facing stocks and the banks are the ones taking it on the chin. Vedanta down 3.5, SBI down 3. India Bulls another interest rate sensitive and therefore 2.5 down. Tata Motors down 2. Hindalco down 2. UPL, HPCL, ICICI Bank. HPCL, you know, despite crude actually falling, ICICI Bank, Reliance, all the big boys down about 1.25%. So what's holding up? Tech stocks. I mean, you should have expected that. Tech Mahindra, HCL Tech, Infosys, Wipro. In the top 5, these 4 stocks figure. Even TCS in the green, about 0.5%. So next to them are the pharma stocks. So DRL and Sun Pharma, somewhat in the green, not a whole lot. But it's tech and pharma, tech primarily, which is holding the green end. It's not a big fall, but some of the big stocks have fallen over 1%. Let's note that.
Okay, so big stocks have fallen over 1%. The mid-cap index is also under pressure, actually. 200 points gone there. The market breadth is quite weak, more than 1,030 stocks on the declining side. You have a whole host of PSU banks. Andhra Bank, where they've posted another net loss, so that stock is under pressure. Corporation Bank, a 5th consecutive quarter of a PBT loss. That stock too is down. Okay, look at Corporation Bank now, up about 5.5%. Union Bank, slippages remain elevated there, so that one is also in focus, down about 1%. This entire space, actually, Bank of India is down. SBI has actually taken the whole PSU banking lot with it. NBCC is down almost about 4% or so post its numbers. You have a couple of others. Jet Airways down another 2.5%. Problems mounting there. Tata Motors down about 2%. The July retail sales were very weak. In fact, much worse than its peers like Audi and Mercedes. So that raises a lot of questions there. You know, you have metal names like Nalco that are now falling down about 1.5%, but profit taking primarily seen over there. Vakrangi is under intense pressure, so down almost about 12% for Vakrangi right now. And a couple of more stocks, it's really profit taking in the metal space that stands out. So Vedanta is under pressure now, down almost about 2-3%. But it's because the sentiment is so weak that we're seeing so many losers crop up. Bajaj Electricals down almost about 6.5%. So unfortunate to hear about the sudden death of Anand Bajaj, the MD of the company. So that's some reaction there. And a couple of more stocks, VIP, etc., coming in for a bit of profit taking. But otherwise, weak opening.
Weak opening, but you know what is interesting is a couple of stocks are making highs of the day already. Kotak Mahindra Bank, for example. I think there's a bit of a buying which is happening even in Axis at lower levels. So that's interesting. And the Bank Nifty also down about 1% now. The Nifty down about 3/4%. Ashwani, is this the dip that you will buy?
There is no safer buying opportunity than to buy when you gap down so much. We've already bought more than usual, both on multi-day and intraday basis. I think easily 150, 200 point rally could happen from here because the markets globally have fallen 2 or 3 days because of this news. So this is not fresh news. So this sort of gap down definitely should be bought. Your stop is, basically below the low of the day. And I would see, recovery happening fairly quickly and fairly soon, particularly led by, private retail banks.
Sudarshan, any thoughts after seeing the opening? You wanted to stay away today.
Yes, there is no positional trade here, not for buying, and of course I'm not going to short it. So this is just a day where we watch the fun, and maybe anything can happen. Just enjoy yourself.
Okay, so Ashwani, you're buying the Nifty and Bank Nifty both?
Yeah, basically.
Okay. By the way, Infosys is at a new high today. Of course, with the way the rupee is moving, that was unexpected lines. But now almost at 1400 now for Infosys. Big moves coming in there.
So rupee has recovered 10 pice. I mean, it went to 69.60, now 69.50.
Okay. Udayan, do you see the IT stocks resume their market leadership given the way the rupee has been moving?
Well, it will be the outperforming class right now. There's no question about that because of the currency. And also there is a mild suspicion that this might become a bigger global problem. So as long as that fear lingers, you will see the obvious parts getting a little bit of money, which is IT, which is pharmaceuticals, which maybe even the retail private banks, the stronger ones that is, and maybe some of the consumer stocks. I think the rest of the pack, the market will probably wait it out a little bit to see if the dust clears and the dust settles a little bit. And once the air clears on the global scene, you might see buying resume in some of the other pockets. But till that happens, and the rupee is still flirting dangerously with 70, I think IT, pharma, retail private banks, and consumers might be the hiding spaces.
Okay, by the way, the market's recovering quite a bit actually.
Rapidly, yeah.
And even the dollar rupee has recovered, so that also is the factor. And as we perhaps pointed out in the morning itself, IT is seeing at least some bit of buying. Ashwani, what's the big call for the day then? You're sticking with just buying the index itself?
No, State Bank can be bought. It's trading at the highs of the day. Tech Mahindra, tech stocks can be bought. See, basically, with this sort of a gap down, anything you buy is likely to recover a whole lot. Even metals, I think you would buy. Because all of this is getting priced in. To act today is to think that, news has just been declared. It's getting priced in and get into banks, get into metals, get into the tech stocks, and you will be in a different market maybe by end of the day if other markets also recover.
Sudarshan, you doing any buying at all?
No, I'm not doing any buying at all. It's too chaotic and random for me today. Okay. Bharti Airtel actually is a short sell for the day.
Bharti Airtel is shorter sell for the day. The SBI stock is actually making highs of the day. Just pull out that stock intraday, and that is actually
it
quite
touched 296 in the morning.
Yes, and now making a bit of a move. Then, I just wanted your thoughts on this metal cycle. If you have looked at it, of course, there's fresh trade war fears that apart. But your thoughts on the likes of Tata Steel and other stocks at current levels?
I don't know about trading view, Anuj, because these stocks have come off quite a bit in the last couple of days, so they could bounce. I'm not an expert on that, but I would be cautious about the metal space, and I'll tell you why. Because one thing which is usually very telltale in the market is how stocks react after their results. And after the results of the declared headline numbers of many of the corporate banks, these stocks have actually jumped, and they were not great results on the face of it. The stocks actually jumped quite a bit. The opposite happened in metals. The results were pretty okay for Hindalco, for JSPL, even for SAIL. But stocks have not gone anywhere after the numbers. In fact, any pullback after those numbers were actually sold into. That often betrays what the market mood about a particular sector is, that the market's waiting for good news to actually give those stocks rather than tank up on them. Okay. So these stocks have underperformed over the last few months, but I think the mood and the momentum is probably against them, given fears which are now circling around the general global space.
Well, we got carried away by the way the markets were moving, and we didn't ask you that important development that would have excited you. Suktankar resigning?
Yeah.
It'll only be exciting news, Lata, if he joins Axis or ICICI Bank.
No, he's not joining Axis.
HDFC Bank point of view, I don't think it is exciting. Who knows? I mean, ICICI Bank, I don't know, if you're saying that he's just joining neither Axis or ICICI Bank, then I don't think it is big news, HDFC Bank is not much that we ascribe so great powers to one individual. Is not a one. I mean, an institution like that cannot be a one-man outfit. It has a very strong board. A suitable candidate, maybe even a better candidate, will come to the fore to take on at the helm of the bank. I think if anybody is selling HDFC Bank today because of that news, I think he's making a gross mistake. If anybody is buying ICICI Bank because Paresh might take over, that I don't know about. That might be more material.
No, I don't know about ICICI. It's a very fluid situation over there because there is the Sri Krishna committee investigating, and there is, up until June for even Chanda Kocher's term to get over whether or not she is in the seat. So no, I'm not talking about ICICI. Axis, he's definitely not joining. That is confirmed news from sources whom I cannot doubt. So anyway, we'll wait and see. There is a very strong buzz as well that he isn't joining anywhere, any of the banking companies that we are thinking about. But we'll wait and see. For HDFC Bank itself, yes, I agree with you. Hardly an institution that can be moved by the DMD resigning. Thank you very much, Udayan, for joining us. And thank you to the technical experts as well. We will, of course, be touching base with you several times today. It's an interesting market, and it's already regained a decent amount from the morning's lows. But still, about 0.5%, no, in fact, 2/3 of a percentage point gone on the Sensex and on the mid-caps, and on the Bank Nifty, about 1% lower. With that, let's invite our market master for the morning, Sanjeev Prasad, Managing Director, Co-Head, Kotak Institutional Equities, joins us now. Good morning, Sanjeev. Your comment on how much the Indian currency and, more importantly, Indian equities will be impacted by the goings-on in Turkey.
Well, Turkey is only one thing. You have to keep in mind the fact that there are several global uncertainties out there. Of course, you have Turkey as a immediate, flashpoint as far as emerging markets are concerned. I hope there is no, big contagion just because of Turkey's internal problems, and also the fact that it has very high external debt to GDP. So if I look at some of the emerging markets, they have been disastrous performers pretty much last 2-3 years now because of various reasons. In most cases, the emerging markets run fairly high current account deficits and also pretty high fiscal deficits. And clearly, the macro situation is pretty terrible in some of these emerging markets. Good news about India is, thankfully, we don't have a lot of external debt to GDP. It's only about 20% compared to much higher numbers for some of the markets which are under more severe stress at this point in time. So hopefully the contagion, if any, would be limited. But having said that, we have to contend with several other global uncertainties at this point in time. You also have this whole US-China trade issue, which seems to be escalating further. And at some point in time, the market also has to start focusing on this whole Iran-US sanctions issue and what does it mean for the crude oil markets. And effective November 5th, when the next round of sanctions go on into effect as far as Iran oil exports are concerned, that probably has a far bigger impact as far as India is concerned, given our huge dependence on oil imports and our, the high sensitivity of India's current account deficit, BOP, gross fiscal deficit, inflation, interest rates, everything to crude oil. So I would, focus on many issues beyond Turkey at this point in time.
Okay, Sanjeev, good morning. We've seen fair bit of FI buying over the last 1 month, and we have seen a bit of a recovery in the broader market as well. Do you reckon the worst might be over for Indian market, and I'm talking about the broader market here?
See, you have to look at this market in a very, honestly, I don't know what, when people talk about market, what it is mean exactly, because you have a set of stocks which have done exceptionally well this year, and some of it actually can ascribe to the fact that the macro has been exceptionally bad this year compared to the last 2-3 years, and that has resulted in a big re-rating of IT stocks, etc., which have supported the market. So if you look at the, let's say, various indices, the performance depends on which index you are looking at actually. That's the whole problem as far as the market is concerned. So if you look at, for example, Nifty, it is up about 8-9% in local currency terms, in rupee terms, but it's actually up only 1.5% in dollar terms. Obviously, you have a situation where the weaker dollar has helped some of the IT companies which have done exceptionally well calendar year to date. If you look at the mid-cap index, for example, it is down somewhere about 8-9% local currency terms, and of course much more in dollar terms. So if you look at the small-cap index, it's down about 12-13%. So it depends on what you're looking at these days. And the broader market, when I say broader market, the headline market is effectively Nifty or the BSE 30. That's been essentially supported by about 10 stocks for now. So the broader market is actually doing pretty terribly at this point in time if you actually look at the, let's say, 200, 300 or 500 stocks.
Okay, well, for now, you know, the space to look at on the upside is definitely technology. So Tech Mahindra, Wipro, HCL Tech are all up about 1 to 3%. Of course, it's also courtesy the move in the rupee, but we're seeing stocks like Infosys hit new highs. That one is up about 0.5%. ITC, by the way, is also at a new high this morning. So there are pockets that are supporting the market and preventing it from falling below that 11,300 mark. Sanjeev, I also wanted your thoughts on how to approach the corporate lenders. Morning, by the way. We have seen a bit of a pickup as far as loan growth is concerned, but is that enough, or do you think that there'll still be concerns on the asset quality side? Would you put incremental money in any of the corporate lenders?
If you have a 6-9 month view, I think there is a lot of money to be made in the corporate banks. If you have a 2-3 week view, then, you know, given the weak macro, I don't think the corporate banks are going to perform. But if you are looking beyond the next 2-3 weeks, hopefully dust settles as far as the EM issues are concerned, then corporate banks have a lot of value to offer. And something which we have been positive on, our view is that the NPL cycle is, you know, largely over. We have started to see favorable amount of resolutions in CLT1 cases and also progressively in CLT2 cases now. Provision coverage ratio for most of the banks has gone up to reasonably decent levels, I would think, you know, in most cases about 50% plus minus another 2-3 quarters that will reach about 60-65%. After that, the loan loss provision number should logically decline, and that should result in re-rating of the bank. So I think it's a question of timing over here. You know, in the next 1 or 2 weeks, I don't think much will happen. I guess till the time, you know, we have more clarity on what's happening on this whole Turkey issue and what does it mean for emerging markets. But beyond that, I think there is value in the corporate banks.
Okay, fresh bit of decline, by the way, for the market, and now making fresh intraday lows as far as the bank Nifty is concerned. 350 points gone now on that, and the last bit of fall is because of HDFC Bank. That's approaching about 1.6% downtake on that one. So that is down a bit right now. Sanjeev, there's also going to be this year, a lot of elections. You reckon that would add some more uncertainty? We have, of course, Madhya Pradesh and Rajasthan, the big ones, and then we'll build up towards the general election as well in 2019.
No, clearly, you know, you have a confluence of factors which will add to the uncertainty as we go forward. The biggest one, as I talked about earlier, is this whole Iran-US issue and what does it mean for global oil markets. And then, of course, you have elections in 3 states, actually, Chhattisgarh, Madhya Pradesh, Rajasthan, all of them ruled by the BJP at this point in time. So I guess somewhere about December, January, we'll have the election. The market will start focusing on this maybe 1 or 2 months in advance. Let's see, what happens as far as the results are concerned. Very hard to predict these things. If the BJP, let's say, loses 1 of the 3 states, then I guess the market should be fine. If it loses in 2, market will start getting worried about the prospects of BJP in the forthcoming national elections. If it loses all the 3 states, then it's going to be a catastrophic event for the market. Then obviously, the whole calculus will have to be redone again about BJP coming back to power and what does it mean for the market. So let's see. I mean, the chances of BJP losing in 2 out of 3 states is very low, I think. I think they will probably get 2 out of 3. That's my sense at this point in time.
Okay. Well, the other big threat that has not really materialized is crude going to 80 and 90 and stuff like that. It couldn't breach 80 and has moved closer to 70 now. But I mean, what would your last time around, I remember you being a little worried about the way yields might go in the Indian market. What would you buy now, Sanjeev, to hide from the global and the macro concerns? You spoke about corporate banks. Is there any other place where there is still value?
No, there is value in corporate banks. There is value in some of the oil and gas companies. There is value in metal mining names. But the problem in this kind of market, Lata, is we are very programmed to act in certain ways. If you have bad macro, immediately you will see people running towards IT, pharma, and some of the expensive consumer staple private retail banks. Irrespective of valuations, people just don't care about valuation anymore these days, and that's how it seems. If you have bad macro, the corporate banks, metal mining, oil and gas names will get sold. So, that's how investors are behaving. Both passive, active, all seem to have the same, thing hardwired into their heads at this point in time. So we have to start looking beyond the macro, then, the price value equation then starts coming into play. Otherwise, at this point in time, we're just programmed to behave in a certain way. That's it. So oil will clearly play a big role, going forward. I am actually pretty worried about this whole Iran-US issue. somewhere the Indian market seems to be reasonably relaxed about it, but given the implications oil has on all our macroeconomic variables, somewhere I think we should be a little bit more at least focused on it. Not that we can do much about it, but keep in mind the fact that even at, let's say, low $70 per barrel, 72.5 is what our forecast is for fiscal 19, you're already looking at about 2.8% current account deficit. Every $10 per barrel increase in oil prices will add about 50 basis points to the current account deficit. So God forbid if you have oil prices going to 85, 90 plus, then you are in serious trouble when it comes to the external situation. And we are heading into elections, so that also puts a lot of pressure on the government to to act rationally at the time of higher oil prices. It will put some amount of pressure on fiscal deficit and bond deals also. So clearly this whole situation can get a little bit out of control if oil prices spike up, and I see no reason why that cannot happen. In the sense, if you look at Iran's oil export, that's in the range of around 2.2 million barrels per day. If even 1/4 of that goes out of global oil markets, actually it's a pretty disastrous situation, because we just don't have that kind of spare capacity. And on paper there is spare capacity, but even Venezuela oil production declining, the supply-demand balance could get upset very, very quickly.
Okay, all right. Sanjeev, we'll leave it at that.
Yeah, thank you very much, Sanjeev, for joining us. We should be listening in to Aditya Puri's conference call. We will put it on air in a minute. At the moment, he hasn't said anything important, and the flashes will come up for you. He has said, we understand the concerns regarding Paresh's development. We wish him all the best. And this is important. This is the most graceful exit with no acrimony. Sad personally, and a loss to HDFC Bank, but life moves on. That's the important statement that's coming in from Aditya Puri. I think that's very important. It's a non-acrimonious, parting of ways. So, I mean, and there is reasonable guarantee now that he's not joining Axis Bank either. So, can we listen in to Aditya Puri?
From the board and goes all the way down to the fellow who initiates the credit, to the guy who looks at the credit. We have very clear target markets which are conservative. No credit process can make up for fundamental strategy. Let's be very clear. So we have target markets that are conservative. We have a split between risk and business. So no one individual can make a decision. And it is the job of the credit people to come up with issues, because that is what their mandated KRO is. We do not ever bet the bank. In 30 years, yes, we go out. We are not over-aggressive. We are definitely cautiously opportunistic. However, we will never bet the bank on an initiative. We test it out. We get some vintage to it. Then only we will scale it up. Now, whether it was our rural initiative, whether it was credit cards, whether it was microfinance, whether it was brokers, whether it was SME, all of these have been tested. And there is depth and management at every level which knows this is the overall product program. You are not allowed to go outside the product program, and that has to be signed up by seniors. So do we have the depth of management? Yes. Will this affect the normal course of functioning? I don't think so. Is it a loss of a good resource? Yes. The board and I will take appropriate decisions within the next 10 to 15 days, which will have the right people in place. That said, as we had told you in our earlier call, we are well capitalized, thanks to you fellows. We have a good business. We don't have strain. We have gone in for the latest technology, which is API-based and is allowing us to use developments in technology to change our process and reduce cost, as well as go in for a wider geography. We have people in place. In fact, if you see the last 4 calls that were done, both Paresh and me had very little to do with it. So as of now, I'm confident to say that even 75% of my transition has already been baked in. So you have individual business managers running the business, and there are individual credit people with them, along with operations and technology, because nothing can be done without teamwork. So the last two major presentations you had the business managers present to you, whether it was payment, cards, retail, corporate, wholesale, HR, the whole lot. So a lot of and these are young guys who are here to stay to deliver it at least across the next 5 years. On a vision basis, it is clear for the next 5 years. Strategy in the new environment will probably change on a quarterly basis. So that said, I'm happy to take any questions anybody may have.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Also, participants are requested to limit their question to 1 per participant. If time permits, you may join the question queue for any follow-ups. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles.
Well, Abhishek Kothari is listening in to the call, and if there is anything more that Aditya Puri says, you will be the first to hear it in the form of a flash that will come on your screen. So not to worry. Let's get on with the normal business, which is, of course, earnings. And one stock we didn't discuss adequately was Bajaj Finserv. The stock has been subdued this morning. Their general insurance business has reported very strong earnings growth, while the life insurance vertical has seen a decline in profit growth. Consolidated numbers are looking good, boosted by the Bajaj Finance performance. S. Srinivasan, Chief Financial Officer of Bajaj Finserv, joins us now. Good morning, sir. Thank you very much for joining us, Mr. Srinivasan. First up, if you can remove any worries about the life insurance business and the fall in profit, what would you attribute that to? The fall in the pace of profit growth is what we meant.
Yes, I think the life business, the last 2 years, we have been accelerating what we call our transformation program. Because of a series of product changes, unfavorable macro conditions, the life industry went through a very poor cycle of degrowth between 2010 and 2014. As the market started reviving, we had also put in place a transformation program because our business model is not bank assurance dependent. So we had to revive our agency force. We have made a series of changes, which included growing individual retail premium, which includes moving up the persistency and in general improving the quality of service. So in the last 2 years, we have had significant traction on the growth of our individual rated premium. Our agency business is growing quite well. We have recently tied up with a couple of bank assurance relationships. We think we are on track. Most of the headwinds are behind us. The macro situation generally seems to favor a reversion of the savings rate back to its peak. So therefore, we are in a good wicket here. However, as we grow in the life business, the new business, the first year business that you do invariably makes a loss. So in terms of the statutory profit that we declare, you would find that there is a strain on the profit. But as we continue to grow our new business book and continue to improve our persistency, we think in about 2 to 3 years' time, we should see a traction in the statutory profit as well. Our focus is on growing the new business value, which is the expected profit to be generated from all the new business that we do. Last year, we grew at 33%. And the absolute number is still lower than where we were at the peak. But we think we are on the right track. In about 2 to 3 years' time, we should be there. Sure. One of the actions we have taken this quarter is to go for a balanced product mix, which means we found that there was excessive concentration of ULIPs in the market, unit-linked insurance plans, which is cyclical because the market goes through a secular downturn. Then you do have a lot of problems in realigning your distribution and your business model.
Okay.
Therefore, we have taken the call to actually go for a 60-40 product mix.
Sure. You mentioned that the quality of the business has improved. You're seeing better persistency ratios and increasing share of protection as well. Is this only for you? Are you noticing this for the industry as well? And what kind of growth rates can we see for the life insurance vertical over the next few quarters?
In terms of overall quality of business, we are seeing most of the top players. We have seen a significant improvement in overall quality in terms of persistency. which now is not limited only to the 13th month persistency, but in terms of the subsequent years, the second, third, fourth, fifth year renewals as well. We were behind the top few companies, but we are catching up quite fast. We were at 77% the end of last year. The top players are in the range of 80 to 85%. So we think they're almost there now. Our focus is now to focus on the subsequent vintages. In terms of growth, a lot depends. The first quarter was not that great. I think the overall market growth in individual premium was only about 5%. It depends on the overall growth in savings rate and the share of the life insurance pie of that savings rate. We did see a significant downturn between 2010 and 14, but it's picking up now. We think conditions are favorable for life insurance to grow at above the nominal rate of GDP, and the better companies should grow maybe 5 to 6% over the nominal rate of GDP. We think over the next 3 to 5 years, this industry should grow at about between 15 and 20%.
Mr. Srinivasan, when will you next need capital?
We won't be requiring capital for FinServe. The only company which borrows money and which may require capital in our group is Bajaj Finance because of the rate at which they are growing. But last year we did a QIP, we raised money. We think we are good for another 3-4 years.
Okay, and in the insurance companies you won't need?
No, both are sitting on significant solvency surpluses. In fact, this year we have paid a maiden first-time dividend from both the companies.
Okay, we'll leave it at that, Mr. Srinivasan. Thank you very much indeed for joining us with your explanations on the way life business and general life business is progressing. Okay, with that, let's shift focus to other results. We had a slew of them coming in. One of them was Union Bank, elevated slippages again, and that led to, of course, foreign asset quality. The P&L, though, looks better than the street estimates as net loss has gotten arrested, has fallen this quarter. Rajkiran Rai, the Managing Director and CEO of Union Bank, joins us now. Good morning, Mr. Rai. Thank you very much for joining in. Can you begin by giving us some guidance on how you see the slippage ratio going? What is the upper limit of slippages that you see for FY19 approximately?
Yes. I would like to correct. Actually, we have made a profit of 130 crores in the first quarter. So, as it comes to the slippages, we had already said that the H1 will be slightly higher on the slippages, and the Q1 was slightly higher than what we anticipated. But then the overall delinquency for the full year is around 3.5. So now I think the major slippages of corporate credit has happened in the first quarter itself. We hope that the next 3 quarters, the slippage will be very moderate. It will be well within the 3.5 delinquency what we have already projected.
Apologies, it is a net profit of 130 crore.
Yeah.
Apologies for that. The other question I wanted to know was about loan growth. I mean, while it is an improvement over fourth quarter, 5.3% is still not much to write home about. It is lower than the industry average. What is it likely to be in second quarter itself, since you have a good idea already, and the year-end growth target?
Yeah, we have a credit growth target of between 7 to 8%. And actually, the lower growth numbers are basically because the shrinking overseas book. So our domestic credit has grown by almost 12.5%.
Okay, 12.5%. Can you tell us a little bit about the NCLT exposure that you currently have? What kind of recoveries do you expect going ahead? And have you seen the resolution cycle for the NCLT cases pick up?
Yes, actually, we have seen 2 major resolutions in the first quarter, and we expect at least 800 crores of recovery by NCLT cases in the second quarter, and the third quarter should be much bigger. So as regards our exposure, we have about 10,500 crores of exposure on both the NCLT listed accounts, and our provisioning has reached 65% and about 69% on the second list particularly, where we expect higher LGD. So I think we are sufficiently covered on the provision side, and the resolution totally for the year around 3,500 to 3,600 crores from NCLT cases is our anticipation.
Okay. On the slippages front, sir, you had said, the level of 4,650 crores that you saw this quarter, the slippages will fall further, right, in the quarters to come?
Definitely, yes, because there was one major corporate account where the slippage was 1,200 crores, plus about 900 crores addition happened because of the existing NPAs, where some LCs and BGs got devolved, which was anticipated, but then this was slightly higher than what we thought. So if you take that out, I think the slippages should moderate between 2 to 2,500 crores.
Okay. Mr. Rai, irrespective of what happens to the power companies, the Reserve Bank looks determined to make the banks provide for all those cases. The last kind of asset quality review list that the central bank has given to all the banks seems to indicate that they want all these loans provided. Even Ratnagiri Gas was on that list, and they want it provided from a previous years itself. So do you think provisioning will take a very big load, given the capital that the government has already assigned to you, which it will give by the end of the year? Will you have capital for growth?
Yeah, we hope that by Q3 we will get the capital. So the additional provisioning requirement, like if you, for example, if you take power sector, we have close to 5,900 crores of NPAs in the power sector already, and we are not foreseeing any further slippage in the power sector now.
Okay.
So all these accounts which is under stress is already NPA recognized. Now in this book we have already 35% provisioning done already. Okay. So worst case also, even if you have to reach 50 to 60% level, I think with the existing operating profit we should be able to do it. We have factored in most part of it in our projection. So we don't see any major hit from the power sector on the provisioning side in the coming quarter.
Okay. So what is your credit cost estimate as you stand today for the year?
It is around 2.25.
Okay. You think you will be able to curb it to 2.25?
2.25, yes. Because we hope that these NCLT resolutions, particularly two major steel accounts, where I have exposure of more than 3,000 crores, if it gets settled in third quarter, it should unlock a lot of value for us.
Okay. All right, Mr. Rai, we will leave it at that. Thank you very much indeed for joining us with your thoughts. So a credit cost of 2.25%, that would still be a bit of a strain, and that's why the growth, loan growth would get affected, and that is been guided at about 7 to 8%. So still, lower than the industry average. We have to take a break on that note, but our attention is definitely drawn by the markets. The first dip got bought, and then again you saw a sell-off coming in, but markets now much better than the early morning levels. Our technical experts, Ashwini Gujar, Prakash Gaba, will be with us in a second.